As your real estate portfolio continues to grow, tracking and measuring your investment's performance in a very organized way becomes increasingly important. Doing so will make life so much easier when it comes time to doing taxes, budgeting for the future, selling your property, or seeking new investments. Conversely, without a routine and easily accessible glimpse into the performance of your investment, expenses can balloon quickly, and you can easily lose track of upcoming repairs, vacancies, or other changes to your cash flow. And so, in this video, we want to quickly show you the important elements of the owner packets that we send to all of our clients each and every month, and give you an idea of what information we use to help you keep track of your real estate investment's performance. Before we begin, it's important to note that we typically send these reports to our clients within the first 5 days of the new month, after all the monthly accounting has been closed out. This means that the numbers that you see on your reports will actually reflect the month prior. In the example we're going to use in this video, the report arrived in the client's email inbox on about April 3rd and reflects the property's performance for the previous month of March. Okay, so first let's start with what we call the executive summary. We want to start here because this is the quick, at-a-glimpse view of your property's performance, as well as a convenient narrative of what happened at your property that month, all on one page. Now, in the first main section that we have here, you'll see a very brief financial overview of your property. For reference, there are 2 columns to represent the performance of the previous month versus year to date. Now, since this report was made during the month of March, the year to date column you see here is totaling the months of January, February, and March. Now, on the left side, you have your key information: income and expenses for the period, the difference between the two, which is your net operating income, other income, such as tenant reimbursements or rebates, and debt service, which is typically the mortgage that you're paying on the property. Then, of course, you have the final total down below, which is your resulting cash flow for the month, client trust account. You can basically think of this as your property's own separate bank account. While sometimes real estate investors will have income from their property go directly into their own personal bank accounts, here at Coastline Equity, when we begin working with a new client, we set them up with a unique sub-account for each of the properties in their portfolio. This makes financial reporting and the whole tax process a lot easier by eliminating the messiness that comes with mingling funds from your real estate investments with your personal bank account. Not only that, but this is one of those pieces that you should be putting into place when building a legal wall between your real estate business and your personal finances. Now, as part of the setup process, we work with our clients to find an acceptable level of starting cash in order to fund the account, so that you have cash on hand and can cover any unexpected expenses that may come up, such as emergency repairs. Sometimes clients also opt to include a level of reserve cash, which is usually a higher amount of cash that remains in the account at all times and then is replenished whenever it's used. This amount is set aside specifically to fund bigger anticipated projects like roofs or repaving of parking lots. In short, looking at this number here allows you to quickly see how much is in your property's bank account for the current month. Vacancies. Next, we have the vacancies section, which will show you which units were vacant during the month, the size of each unit, how many leads your property manager has spoken to about the unit, how many showings we did, and how many rental applications we received. This section is a great snapshot of all the leasing activity that has been taking place at the property. Just remember that this particular report was sent to the client within the first few days of April, so the units that you see here were actually vacant for the month of March and were already filled by the time April started. Upcoming lease maturity. This next section shows the leases and units that are about to become vacant within the next 3 months. Again, you have the unit or apartment number, the square footage, and the date that the lease will mature. Now, one thing to note here is that most residential leases run for a period of 1 year and then will default to month after that initial rental period has ended. This means that if you see a unit in this section, it doesn't necessarily mean that the tenant has actually given a notice to move out, or that the unit will be vacant on the maturity date. Rather, it simply means that the initial term is over and is now likely on a month-to-month basis. Non-recurring expenses. This section of the executive summary shows you any non-recurring expenses that came up during the month. These are basically any expenses that do not regularly occur on a monthly basis. So while you may expect to pay utilities and landscaping each month, a unit turnover after a tenant has moved out, or in this case, a reinforcement built onto one of your decks, would be a non-recurring expense and would thus show up here. Accounts receivable. Accounts receivable will show you which of your tenants have some kind of balance due. Now, this could be for rent or any other charges posted to their account. Your property manager will document the communication and action that they've taken with the tenant in order to rectify the situation. Legal. This last section of the executive summary will give you updates from any legal action that is occurring at your property. Now, this could include eviction notices that were sent to tenants, appearances in small claims court, or the handling of any frivolous lawsuits. Okay, so now that we've taken a look at the executive summary, let's dive a bit deeper into the more detailed financial reports of your monthly owner's packet. Owner statement. First, as you will see here, we have the owner statement, which is essentially just a bank statement for one specific property. Down below, this section simply shows all of the transactions that were made within your property's bank account. This will include all the deposits of rent and other income, as well as expenses. With regards to expenses, this can include both recurring monthly expenses, such as waste removal, and non-recurring expenses, such as plumbing repairs. Essentially, this is a fully transparent way of seeing all the transactions that occurred within your trust account. Cash flow statement 12-month. As the name suggests, this section allows you to see the cash coming in and going out over the course of the entire year. The top portion shows all the different forms of incoming cash that the property generated each month, and the bottom half of the report shows all the cash that was spent each month. Cash flow statements reflect the cash inflows and outflows as they actually occur. And some particularly useful items that you'll find on this statement are the distribution amounts that get paid to you as your personal income from the property, and any prepaid rent or security deposits that a tenant pays prior to moving in. Overall, you can refer to this statement whenever you need to see the actual amount of cash on hand at your property during any given month. Income statement. This is where you'll go to really assess the performance of your property, since it highlights the revenue and expenses and then indicates profitability. Because of that, it can be particularly useful when preparing to sell your property or you're seeking additional financing. Keep in mind that this statement doesn't reflect things like your monthly income distributions, any personal money that you contribute to the trust account, the mortgage payments you have in the building, or capital expenditures. Annual budget. Now, this allows you to easily see the actual income and expenses that occurred compared to what was projected. As you can see here, the information is laid out for the current month as well as the year to date. Of course, these sections are broken down into more detail so that you can see which specific expenses, for example, vacancy turnovers or common area maintenance, were over or under budget. Balance sheet. This statement provides a high-level snapshot of your property's performance by reporting assets, liabilities, and owner equity, all in the same place. Your balance sheet is a key report that you or investors will use to monitor the long-term financial health of your rental property. On top, you have assets such as cash on hand and any building improvements that increase the property's value. On the bottom, you have liabilities such as security deposits that are being held that will need to be returned once a tenant moves out. And owner capital, which refers to any additional funds that you've supplied to the property. Okay, so we're moving on towards the end of the packet, and you have the general ledger. This statement shows the specific debits or credits that were posted to your property's bank account. It's great because it breaks down everything into their respective categories, from base rent and pet fees that were received from tenants to electricity and landscaping costs that were paid out to vendors. It also helps our accounting team keep things organized internally because it displays those category names alongside the unique GL codes that we assign to them. Check register. The check register, on the other hand, displays much of the same information as the general ledger, but it's typically organized by date, regardless of the category. It's where we record all of the check and cash transactions that your property has during the accounting period, and it's important to note that entries show up on the check register as soon as our team has cleared a check to go out. This means that you will see transactions here before the bank actually clears the checks and puts them in your bank statement. It also means that transactions show up on the check register before they do on the general ledger. So if our office processed a check on the 30th of the month, you'll see it here on the check register, but it won't show up on the general ledger or the bank statement until it clears the bank the following month. Rent roll. The second to last page is the rent roll. This gives you a list of the following information: the name of each tenant, the space that they occupy, the rent they pay each month, the security deposit, that they put down, the term of their lease, their actual move-in date, and any amounts that are past due. Note that a positive number in this last column means that the corresponding tenant has a balance that they still need to pay. However, it's very common to see a negative number in this column instead. Now, this simply means that the tenant paid next month's rent before the new month actually started. So in this example, we have a report that was run for the month of March, during which time they were all caught up and had no balance due until they would be charged again on April 1. Because anytime a tenant pays rent, it shows as a reduction in their balance owed. Their prepayment of April rent is subtracted from their zero balance in March, resulting in the negative number that you see here. Aged receivable detail. Lastly, in our owner packet, we have the aged receivable detail sheet. This simply highlights any amounts that are still due from the tenants at your property, and it specifies the original date that they were charged, whether it be for rent or some other fee, and the number of days that they are delinquent. Referencing this statement allows you and your property manager to quickly see which tenants are behind on their payments and then work to fix that. Okay, so that's our run through of the monthly owner packets that we send to all of our clients each and every month. All of these are stored digitally with multiple backup copies saved for the lifetime of your investment. With your owner portal on our website, you can quickly and easily reference the financial information for any month and year that you need. So whether you're providing information to your CPA, sharing data with lenders, comparing your property's performance with that of a colleague, or preparing for a future acquisition, you'll have all the key financial information on hand and ready to go. From all of us here at Coastline Equity, thank you so much for watching, and let us know if you have any questions. Until then, we'll see you next time.